Welcome to the Rigatoni Capital podcast. I'm your host, Colin. It is the morning of April 6th, pre-market, Monday after Easter, after a long 3-day weekend. It seems like markets are up slightly. We're a little green here. WTI is 111. NASDAQ 100 was up 0.37%, if you can see it. And the S&P was flat. It's up though, which is surprising. And I did see Bitcoin kind of went on a little tear last night before it pulled back this morning. Bitcoin's at 69,348. Hopefully you guys can see that on the screen here. So Monday morning after Easter, I think that the volume of today could be a little slower. I don't know. I don't follow volume, but it just seems like there could be a little bit of a lull if we don't get a crazy geopolitical news, like if we don't get crazy posts like we got on Easter coming out from Trump. As you can see, there's a meme I posted here. You thought I was going to post some normal shit for Easter, and this guy has the meme with JD Vance in it. So yeah, that was like a crazy post that we got on Easter. Somebody had mentioned like we thought Trump had gotten hacked. Who knows? What we do know is that we had that unbelievable story over the weekend. It looks like it's front page Wall Street Journal. For people that weren't paying attention to the news over the weekend, a downed airman, a mountain hideout, and a high-risk rescue in Iran. The U.S. mounted a high-stakes mission into enemy territory to get that, jet fighter out of there that got shot down. I don't really know the specifics of the story, but everybody's saying it's going to be a movie. Starring who, do you guys think? That's the big question. We ended up not getting serious infrastructure hits yet. I think that Trump was trying to give them a deadline on opening the Strait of Hormuz, but I thought that he said the Strait of Hormuz is just going to open up naturally anyway. So a lot of back and forth between Iran and Trump, and then, of course, Iran, sometimes it sounds like they want to fight back, and then sometimes it sounds like they're ready to make a deal and call for some kind of ceasefire. So all of that is supposed to move the markets, but as long-term investors at Rigatoni Capital, and that's who I'm trying to attract here for the podcast, are long-term investors. So what do we care about? We just care about what something like American Express was trading at. That's all we care about. I know that sounds really sad and disgusting during wartime, but this is all that matters to me right now. Is American Express going to trade down back to 290 so I can purchase it? Is the NASDAQ 100 going to pull back to where it was at the lows, which was around Monday last week? If you know, we traded down to a 10% correction on the S&P and NASDAQ 100. Are we going to trade back to those lows? I don't know. I don't try to time the market, but I'm not going to buy it now that there's been a bounce. And I didn't buy it during the 10% correction, and everybody knows why, because I posted about it on Substack and explained that there weren't really a lot of stocks that were for sale, in my opinion, other than American Express. Over the weekend, I listened to like 8,000 podcasts. I had some spare time, and it seems to me overall very bearish sentiment from the investor community still. I think that the most important thing I'm going to mention is that as a long-term investor, I think the U.S.-Iran war is more of a short-term disruption, of course, just like every war is. That's not really the problem, that investors are maybe not coming in to buy the dip that strong. If you recall, during Liberation Day in April last year, was it last year? Because now we're in April. Yeah. So this time last year, myself was pounding the table that it's a buy, it's a buy, it's a buy. And retail investors proved to be correct in that situation. And they bought the dip, and there is this narrative that the institutional investor was like, wow, retail actually did a good job here and bought the dip, whereas we didn't as much as they did. I think the opposite is true today. Retail's not buying that dip today as much as they were on Liberation Day, and maybe I'm like becoming a voice for them in some sense, the buy the dippers, because I'm not pounding the table to buy the dip. What I'm saying is that AI disruption is actually a bigger issue than the US-Iran war. I think that is the number one main issue. The number one main issue in the stock market today, in the US stock market today, comes down to something like Microsoft. I think Microsoft had this bounce here, and this is going to be the most important stock, in my opinion, to watch. What happened? What happened was the AI disruption story is a SaaS story. So ground zero was Salesforce. This is Salesforce's chart. Over 5 years, this is their chart, all-time chart, 1 year chart. The AI disruption ground zero was Salesforce. It was like Monday. It was Workday. I'm sharing the stocks on the screen as I talk. That's why it sounds weird. And it was the total index IGV. That's the software ETF, right? And look at it. Okay, so in the IGV, you have stocks like Palantir and AppLovin that somehow, I don't know why, who decided that they should be in there, because I guess people think AppLovin's a software, but it's not. I don't understand that. I guess it's not a SaaS company, but they're describing it as a software company. That's fine. What's interesting to me is that it feels like Microsoft is becoming ground zero in the AI disruption story. Not sure if people are talking about that or not. It seems like certain people are, but they think it's Microsoft. It's a Mag 7. It'll just bounce back. It has Azure, which is an unbelievable cloud segment of the, it's an unbelievable revenue segment for them. And Azure, I agree. I don't see any issues with Azure, but one little hiccup there. And yeah, I think Microsoft has a lot of issues. And I think that there was a post that came out, an article that noted that they had made all of this cash with OpenAI so far. They own a nice chunk of OpenAI, right? I think that's another issue. I think OpenAI is also like a ground zero issue in terms of the AI disruption, because OpenAI fell behind Claude so much with regards to coding and enterprise. ChatGPT is still very popular among the normal, regular, non-institutional user, but I know a lot of people have switched from ChatGPT to Claude. They made that switch months ago. I also believe that some people are just canceling their ChatGPT subscription now. Once they realize that Claude works, and yeah, okay, I don't need ChatGPT. A lot of my information has already been transferred over, which you can also do. Your history can be transferred over. I think OpenAI, valued at $850 billion, is in deep, deep trouble. Meaning, I don't think it should be valued that much. I think this is becoming this is kind of like the issue, and it's not even a bubble issue. What it is that it's AI is so disruptive that it eats other AI companies. Does that make sense? So like, even if Claude were to IPO and it was valued a lot less than OpenAI, so you think it's a deal? I don't even know if I would want to buy that stock or that company today. So anyway, let me show you this tweet I got here from Anissa Gardizzi. Sorry, I can't pronounce names, and it's a problem. There's a growing tension between Sam Altman and his CFO, Sarah Fryer. Privately, Fryer has started speaking about her concerns about the firm's massive spending on compute and Altman's hopes to IPO this year. And this post came out on what? It's an exclusive that came out. So something like this is not to be taken too seriously, because how many times have we seen these hit pieces and these drama pieces that really never come to fruition? It's also none of the public's business to know if the two are bumping heads. But this is a definitely like a reason what I would be concerned about. You know, the investor base, the public stock market investor base, does not want a company like OpenAI in this environment. They don't want a company that's going to. I wish it would say how much money that they're looking to spend in terms of like capex and investment spending, and it's a ridiculous amount of money. You know, I mean, who knows when they'll ever become cash flow positive, when they'll actually be profitable. I don't think it's anytime soon. And Sam Altman, that environment where OpenAI came out back in 2023 and he was like, hey, you know, we don't even care about being profitable. That's not the goal right now. The goal is to give back to the world and change the world. Fast forward to 2026, that's not what investors want. You know, the environment has changed so much that something like OpenAI right now, valued at that much, and, you know, we have this private credit bubble and a lot of investors can't get out of their positions. And I really think that this is where, if this is the worst case scenario, that something like OpenAI flops, and let's say they do IPO and the stock crashes like crazy. I mean, like that's the best case scenario for the bulls or the people that were concerned about a AI bubble. This is it. This would be it, in my opinion. And then, of course, what happens with Microsoft in that situation? They have so much eggs in one basket. They had so much investment, and it seemed like they were relying too much on OpenAI. And it would be nice to see Microsoft eventually, you know, come up with some kind of new business strategy that doesn't rely on something like an OpenAI so much. But people would say Microsoft is making a ton of money off of OpenAI, so back off. I understand that. If I'm talking a little bit weaker, it's because somebody here is sleeping. I keep seeing this post all weekend. More Americans are breaking into the upper middle class. Research shows that ranks of higher earners have grown largely over the last 50 years, while lower rungs of middle class have shrunk. It's the whole K-shaped thing, but showing that like there's a big group of upper middle class that has really, you know, increased. I don't know. I guess this goes only through 2025. I'm showing you a chart of share families in each group, how each share has pretty much increased in terms of the upper middle class, the rich. It says the lower middle class and the poor, near poor, have decreased. So this is supposed to make you feel good. But here's my first thought. You always hear about these HVAC folks, these people that are selling their HVAC folks to Silicon Valley AI engineers. Here's the thing. These people that are breaking into the upper middle class, what is causing that to occur? What's causing it to occur is that they own assets. They own real estate in their neighborhood or their state that has done really well, and they also own their own businesses like that HVAC business or a small family office or a small family business. They own, they have a 401k and they own stocks. So That's why I think they're breaking into the middle upper class. It's the only reason. And that's the theme of Rigatoni Capital. I don't know any other way to get wealthy and break into the upper middle class without owning assets doing that. Is there another way to do it? Yeah. You can start making a big salary, but even if you start making a large salary, it doesn't let you keep your wealth. So we understand all that stuff, right? That's kind of common sense. And then what I wanted to talk about was tomorrow I will be having a special guest on the podcast. I'll be interviewing him. He's a big bull on Netflix. Netflix just got a rating and price target boost from Goldman Sachs, and it explains here's why. So we don't need to know here's why. We already know why. Netflix obviously bounced since they walked from the Warner Brothers acquisition, but it really hasn't bounced. I would expect it to be trading at 120 eventually. I think that's what the market investors, bull investors believe that, Netflix is a $120 stock. But that doesn't matter because, we're in a macro situation right now that will determine where Netflix bounces to. But I mean, what a crazy bounce if you would have held out and accepted that they were going to buy Warner Brothers, because that's what I thought they were going to buy Warner Brothers. And that's even part of the reason I bought it, because I thought if they didn't buy it or if they bought it, they would be in a win-win. Obviously, it looks now that they did the right thing by walking. But yeah, I mean, like Netflix, this is the stock that I'm interested in, and I wish I owned more now. I probably own it in the $80 range, and we're trading at 100 today. So, and on my Substack, I pretty much try to, if I bought something, like it's pretty rare if I buy something. Here we go. So on January 22nd, on January 22nd, I posted on Substack that I had purchased Netflix. New position alert. And then I go through why I bought Netflix, just briefly. I don't do a crazy deep dive. That's not how I write. I'm not a deep dive Substack writer. What I'm trying to do is just briefly give you my thoughts. And I let the other experts do the deep dive. So, I bought this stock because I thought it was eventually going to be trading higher in the next few years. And like most times when you buy something, you'll be surprised it bounces back a lot faster, if you're lucky. So I think that's all I'm going to talk about today, because everybody's acting that this is going to be a crazy week. We got a lot of stuff happening. The Fed this, and even earnings is coming out. But the earnings doesn't come out following week. This week is not really a week for earnings. I'm sure there's a few companies reporting, but financials, when do they start coming out with earnings? It's not this week. Somebody's trying to claim that it's this week. I don't think it is. Let's check it, guys. Okay, I'm looking for the week of April 6th, guys. There are no earnings this week other than Delta comes out on Wednesday morning. I mean, come on. Why do people say something when they don't actually know what they're talking about? Somebody had mentioned that, earnings starts now. Like now we're in the earnings season, but it's not. It's not this week. Let's check when JP Morgan reports, right? They report earnings Tuesday, April 14th, JP Morgan. So look, not a lot going on, in my opinion, this week for long-term investors. That's important to know because, we'll get CPI, we'll get all these data points, but really just doesn't matter for us. It's good, it's cool and interesting, and I'll talk about CPI or whatever's coming out this week. But that's not the point of the show. The point of the show is to make sure you keep your head in the game and your eyes on the ball. And that just means that we're waiting for stocks to trade at attractive prices. And it's just my opinion that if you're pretty much invested already, there wasn't really anything to buy. And if you're younger and you're trying to build a portfolio and you just have all this cash sitting there and it's not making any money on the sideline, you're not Warren Buffett, you kind of want to put it to work, then yeah, you could be buying something right now. But for someone like me that's almost fully invested, I don't have a ton of cash on the sideline. A lot of I already own every stock there is practically. I mean, my portfolio has more than 50 positions. This is my portfolio. You might not be able to see it. My head's in the way. This is my portfolio, and I really should show you guys my updated gains and losses, but I just keep forgetting to do that. But these are all the stocks I own. Probably about 50, and I own like VTI, the Vanguard US stock market index. I own the QQQ, so I own index funds. I own sector ETFs like the SMH, so I own stocks within stocks within stocks, and then I own individual stocks. So, that's why everybody's situation is really different. And when we pulled back 10%, last week, I didn't see any stocks that were attractive enough for me to buy. Liberation Day this time last year, I did see a lot of stocks that were flashing buy signals. So different situation. It just may end up being that the retail investor was smart again and didn't go all in on this little 10% correction. They might just have a feeling that we're going to go back down. And of course, like I said, again, we don't try to predict the future of the stock market. We're just trying to buy when stocks are cheap. Hopefully that makes sense. Sorry again, I was like having quiet type of tone today because somebody's here. And what else do we need to do? Podcast guest comes on. Oh, by the way, my buddy Joaquin. He'll be joining us the show if he stays alive for the next forever, hopefully. These fig trees are pretty cool. I thought that we needed some green, we needed some life in there. Hey, I think I can make my background like this. Isn't that cool? Now you can see all my gray hairs. So, and to my left shoulder, that's the old CEO of Rigatoni Capital. That's Rigatoni Pierre himself, the old CEO and founder of Rigatoni Capital. That's him right there. A blue French bulldog. Middle name was Pierre, Rigatoni Pierre. Very good investor. But his first passion was definitely sports, soccer. It wasn't long-term investing, but he did start Rigatoni Capital as a founder and CEO. So we have a guest coming on tomorrow, which is, I'll tell you now, Simeon McMillan of Accrued Interest on Substack, and we're going to talk Netflix with him. Hopefully we'll talk Meta and AppLovin as well. And Thursday, I have another special guest coming on who normally comes on. That will be Bag Holder on Substack. His name's Kevin, and we'll probably talk more gold, Bitcoin with him. And then hopefully next week I have a new guest coming on. And then the following week, I'm really excited to also have a new guest come on as well. So thank you guys for watching, listening. Rigatoni Capital is on Substack. Rigatoni Capital is on YouTube and Spotify. All right. Thank you so much. Bye.